Hello everyone. In today's video, we're going to look at two stocks which are looking good and which are also staying strong in this weak market. Now, one of the stock is from the print television and media sector, and the other stock is from the healthcare space. Now, a lot of you might be already thinking, that markets have been weak, markets have been volatile, and I keep on giving stock recommendations every week. Now, in every cycle, in every kind of market, there is always going to be a few stocks which might potentially do well and which might go up even though the market, kind of goes sideways or kind of goes down. Now, these kind of stocks, it's very important to stay invested in these kind of stocks because they can potentially give you potentially good returns when the market is sideways. And if the market doesn't fall too much, these stocks might potentially do well as well. Again, that's why I'm giving you stocks every week, at least two stocks, which can probably do well. And what is important here is, even though the markets stay weak, it's very important to be invested in these stocks with a stop loss and with a small position size around 5%, and if you don't know trading, and stay invested in these stocks. So before we jump into this stock video today, what I want you to do is like this video or hit the subscribe button so that you get all these videos every week right in your phone notifications. Okay, so let's not waste time and let's jump into the stock video. So the first stock today I'm going to look at is from the print, television and media space, which is JAGRAN PRAKASHAN. Okay, so this stock has been in a very strong downtrend since quite some time, and I'm going to show you the stock technical analysis before we jump into the stock fundamental analysis. Okay, as usual, we'll do both so that you know what stock you're buying and what's the market price also you're buying also. Okay, so so this is the stock. As I always say, start with the monthly charts, and in the monthly charts you would see that this stock has been in a very long sideways range since 2008, right? Since 2006 the stock has just been going sideways. But of late there's I think a potential area that I'm looking at here, a potential price beyond which this stock might again head into all-time highs, which is around 200 levels. So it's almost 150% returns from the current price, and that's one of the reasons why I'm recommending this stock today. Now just note what has happened to this stock, since 2008. So it was in a strong downtrend, then it went up, came down again, went up, and then it came all the way back to levels of 30-40 levels. And from there it has again gone up, and it's trying to break out from a very key important resistance level, and this is the zone that I'm looking forward to, right? So this zone here is a very strong supply zone, right? So there was demand here, the demand was broken, the zone was broken, and now that's acting as a strong supply zone, and that supply zone will potentially be will probably be taken out in the coming weeks, coming months, and the stock might tend to head higher. Now in case you don't know what is demand and supply, I did post a video last week, so don't forget to check out this video. It's right on the top right corner, you can find the link, or in the description you can find the link. So that will definitely help you understand what are demand and supply zones. So if you understood that, then definitely this video would make more sense to you, and you can also see what I'm talking about today. Okay, so now this is the level that I'm looking at here, right? So this is the area where this stock has been going sideways for quite some time, because there was supply here, there was selling, price came down, again the price went up, there was selling, it came down, then again every time this price goes up there, it sells off, again there's sell off which happens and comes down, right? But also what I see here today is a very important pattern that I usually look forward to in stocks which are in a strong downtrend. Now this is inverted head and shoulders pattern. Now in case you don't know what it is, again I made a video on this. It's one of my most favorite patterns. I did also post a video sometime back, so don't forget to check out the video again. The link is on the top right corner or in the description section. Okay, so this is the inverted head and shoulder, and this potentially kind of signals the end of a long-term downtrend for any stock. And also if you see, this stock also has broken out from a long-term downtrend. So the breakout happened sometime back. The trend line breakout happened sometime in June, and since then it has been going sideways, and now it looks like that it has retested that breakout zone here. So there was a breakout back in Jan, 1 month back, and that was inverted head and shoulders breakout, and now the stock is just going sideways. And this week it has given its highest 52-week high closing, right? So last time, if you see, the closing was 75.85, and this week we got one of the highest closings, which is 77.3. Now the other interesting point to note here is the volumes, which have been picking up along with this inverted head and shoulders pattern, right? Since November 2019 the volumes have been pretty good, and the stock has been going sideways. A lot of people have been buying the stock. Now the other point I want to note is the media sector itself has been going up. Now this company also has, Radio City as it's one of its companies. It owns Radio City. So Radio City also is going in a tight range, and I feel if Radio City breaks out also, that could potentially benefit this stock as well, and the stock also might head higher from here. Okay, but remember the breakout here has already happened. It's just going sideways, and today from this video onwards, I'm going to show you two more things, which is CCI. So CCI here is above 100. I always talk about CCI, which is one of my indicators for scanners, and it is above 100, and it looks very strong, and it is in bullish momentum. And the other thing I wanted to show you is the relative strength. Now, if you don't know what is relative strength, I have written a nice blog. I'll also make a video soon. But if you don't know what is relative strength, you have to go and check out this article which I've written. So it will tell you, what does relative strength mean, and what it means for a stock which is going up or going sideways and the market is going down. Now, this is exactly what's happening here in this relative strength chart. If you see here, this stock is now outperforming the index, and it is outperforming the Nifty or whichever benchmark you take, and now it is kind of breaking out also from a very strong base here. Now, so relative strength has already made a new 52-week high, whereas the stock is still around that 52-week high, and it also might potentially give a very good breakout in the coming days. So don't forget, relative strength comparison is a very, very important indicator to understand the strength of the stock, whether it will go up or down. And right now it shows that even though the market is going down, even though the small cap index is going down, mid cap index is going down, this stock is heading higher, right? And is also finishing a very important pattern, which is an inverted head and shoulders breakout, and that's why I'm recommending this stock today. So that's to do with the technical analysis of stock, and it's very important to do technical analysis so that you understand the price points and you get a very good price entry, and this will probably put you in profits immediately. But before we jump on to the technical analysis, what I want to also cover is what are the targets that we're looking at, what are the stop loss. So for me, the stop loss, I'm going to keep it at around 58 levels, which is pretty deep, from the other stop losses that I keep usually. Now, if you're conservative, keep it at 58, but if you're aggressive, you can also keep it at 66. But the chances that if the market is, falls drastically, then that stop might hit, much easier. So I'd keep a stop at 58, buy the stock today or tomorrow, and look for a good move in the coming days. Right, so that's the stop loss, and my first target is around levels of 125, which is this previous levels over here. So I'm looking for first targets of 100 and 125 levels, and I think we should get this probably in the next 6 months or so. If the markets stay well, or if the markets bounce back, then we might get it even much faster. So that's the targets that I'm looking forward to, and don't forget to trail your stop loss once you're on profits. It's very important, but because this stock can even head to 160, 200 levels. If the market stays well, and if there's some positive news which is coming in this company, then it might also do well and head higher. Okay, so that's the stop loss, and as usual, don't forget to allocate around 5% at least, because if you allocate less and if the stock heads 100% higher, it might not do good for your portfolio. You might not get good returns on your portfolio. Okay, so that's the technical analysis, and now let's look at the fundamental analysis of this company. As I always say, it's very important to know what company you're investing in, right? So this is from the media conglomerate. It has multiple businesses. As I said, it also has the radio business, which is Radio City, and it also has a printing business, right? So it has a few brands of newspapers which it runs, and it claims that it's one of the #1 newspapers in India. I'll let you comment on that. If you do have thoughts on that, let me know. But what I know is it's in the printing industry, and it also has Radio City as one of its businesses. But the printing industry, the printing business is what gives its majority of the revenue, while the radio segment gives just around 10% of the revenue, right? So printing, publishing, and digital gives 86% of the revenues, while the FM radio business gives just 10%. So what's important here is what's the printing business doing, and let's look at the numbers also, right? So the ROC is pretty okay. It's around 5%. ROE is around 5% as well. Stock is around 10 PE, and while it has a very good sales growth of 20%, right? So just looking at the history as usual. Now, this is not a very great company in my opinion, but what's happening is of late, the sales have been coming back to normal. It did have a very good sales increase until the COVID happened. But then, because of COVID, there was hardly any sales in this company, but now it's picking up again, right? And that's one of the reasons why I'm recommending this stock, and also the printing business also might pick up going forward as well. So looking at the quarterly results, so obviously because of COVID, we had a significant drop in those sales numbers and profit numbers. But what's happened now is we're almost back to 2019 levels, right? So we're almost back around those numbers, around 500 crores mark in December Also, the profit margin is around 32%, which is pretty decent. Compared to the previous highs was 23-24%. So we are back to 32% now. And also the profits have been, one of the highest ever PATs reported by the company in a single quarter, right? Now that's what makes this company interesting today. And that's why I'm covering this company, because of that high EPS that it has earned in this quarter, right? Also look at the last, 12 months, we've had around 1,600 crores of business. Not really great, but I'm expecting this company to do well going forward in terms of PAT. And if sales increase and if people start consuming again, the newspapers, which predominantly this company does, then this company can do well going forward, right? So debt has been going up. It has been around 400 crores, but it has, traditionally around an average of 400-500 crores, but it has come down to 300 crores now. And reserves have been pretty good, around 1,900 to 2,000 crores. Okay. And the final thing that we look at is shareholding pattern. The promoters have increased the stake from 65% to 69%, and FIs did reduce the stake, but again they've increased it to 2.9%. DIs have reduced the stake, and public also is kind of stagnant, right? So that's from a fundamental perspective. Now don't forget, these companies, again, I'm looking for turnaround companies which are coming out of a strong base, and we know what has happened in some of the stocks that we posted, and also posted a thread on Twitter about my favorite inverted head and shoulders pattern. So don't forget to check it out. And this is a very reliable pattern to pick up stocks which are coming out of a long-term downtrend. Now, by any chance, if there is a very positive news coming up in this company, then the stock might do really well going forward. So don't forget to invest at least 5% in this stock. Keep a stop of 20% around, as I said, 58 rupees, and you might end up, making some decent returns in the stock. So that's the first stock. The second stock that I want to look at today is from the healthcare space. And this, again, while a lot of stocks have been correcting, Apollo Hospitals has been correcting, Max Healthcare has been correcting, this stock has been going sideways, and the stock name is ASTERDM Healthcare. Now, I did post about this stock sometime back in Twitter, but today I want to cover this stock again because this stock looks really good, and it looks like after the results were announced last week or in the month of Feb, the stock hasn't gone down that much, which means the markets have taken it positive, and I presume that this is going to head higher. So yeah, let's jump into this stock, which is ASTERDM. So as usual, we're going to look at the technical analysis. So what I want to start with is, so this stock has been listed in 2018, and then we had a breakout, back in August 2021. So that was a massive inverted head and shoulders breakout. Now this is the second stock today with inverted head and shoulders breakout, right? So it's my favorite pattern, as I said again. And if you look at this is a strong breakout that happened back in August, right? Now after the breakout happened in August, the stock went all the way up and it has retested that zone again. Right now, that's a demand zone, right? So again, as I said, if you watched my video, you would understand why this zone makes a lot of sense to look at, because there was supply here, it broke out, then it is again retesting now. Now, a lot of people who missed to buy the stock are accumulating the stock now, and that's why the stock is not going below that zone. So that's why the stock also is, looks good for me, because after this retest, the stock is going up again, right? And also the stock has reversed from a trendline support, and this week, last 5-6 weeks, it has been going in a tight range. Since Jan, it has been going in tight range. So that's almost 2 months of tight range in the stock, and I'm expecting a very good breakout in this stock in the coming week. Okay, so in case you want to buy the stock, you can buy it at current market price, and here the stop is pretty less. The stop is going to be around 167 stop, so that's around 20 points, or around 10 to 11% of stop, and that's a pretty good risk reward ratio in this weak market, right? So in case the stock does well, and if you get around twice or thrice, like risk is 10% to 11%, and if you get 30 to 40% returns, you can feel free to book and come out of this booking some decent returns. Now in this case, since the stop loss is just 10%, you can also look at 10% to your portfolio if you want, because if a stop hits, we lose just 1% of capital, and that's pretty decent in terms of losses. It's not really much, right? So that's why I'm saying you can go with 10% as well. So that's the technical analysis of ASTERDM. Inverted head and shoulders breakout, consolidating, and since results have come, there's not been much movement in the last 6 weeks, and strength also is pretty good. Now, if you look at the strength has broken out, and it is going sideways, and I think there's a huge divergence happening here, and I think this stock can do well in the coming weeks and months. Okay, so that's the technical analysis, and let's look at the fundamentals of this company. So, being from the healthcare space, this is one of the biggest companies in the Gulf regions, and it's an emerging player in India, which means it's just setting up its operations probably in the last 5-6 years. Exactly, I'm not sure how many years, but it is increasing its presence in India, and it's doing pretty decent. That's one of the reasons why I am covering this talk today. So it earns 81% of revenues from Gulf region, and rest 20% revenues come from India. And hospital segment accounts for 54% of the revenues, followed by pharmacies and clinics. Right. So the Indian business has not been generating really much ROCE, while the Gulf has been generating 25% ROCE. So that's one of the problems, and that if that changes, then probably it might do well in the coming days and weeks. Right. So ROCE is around 10. As I said, ROE is around 10 also. P is around 23. Now, one thing I want you to note here is, while a lot of other stocks have been trading at a 40-50 PE, ASTERDM has been trading at a 23 PE. Now, that's undervalued in my opinion. There could be multiple reasons for that, but I think it is undervalued definitely. Okay. Now, in terms of sales, this company has posted one of its highest quarterly results in December, 2650 crores, and also its profits have been also pretty high, not all-time high, but definitely high, around 150 crores, which is pretty decent. And again, the sales also, if you see, it has gone from 2000 crores to 9000 crores in the last 12 months, and the profits also have been pretty high, around 400 crores in the last 12 months. So these are some of the reasons why I'm picking up this stock today. Fundamentally, it's doing really well, and it's been consolidating since quite some time. Since it was listed in 2018, it's not done much, right? So it's almost a 4-year consolidation in stock price, and I'm looking for some good returns here. The debt has gone up. So that's definitely not very concerning, but debt has gone up, and their cash reserves also going up. So it's not something to really worry about, but it looks okay, right? Not a great debt numbers, but it's okay because the company is growing and the emerging player in India, and probably the company is taking debt to increase its presence in India, right? So from a shareholding perspective, promoters don't hold that much. So I'd have expected at least a 50% greater than holding, but that's again not a very worrying thing to look at today. The positive thing that we want to look at today is the sales, the growth, and that the stock has not done anything for the last 4 years. And while a lot of stocks have been falling in the healthcare space, this company has been standing strong, right? And that's one of the reasons I'm recommending this stock. So these are 2 stocks that I want to discuss today. I hope you liked both these stock ideas from me, and I hope you liked my analysis as well. So again, don't forget to hit the like button and subscribe to my channel before you drop off. Otherwise, take care, stay safe, bye-bye.